downtrodden government is constructing the houses and giving, whereas for the affluent, they have to choose their own requirement. So the residential units demand is more rather than the supply till recently. Maybe due to COVID, it has come down because the income capacity has come down. The demand also has come down. But for that, in the past 20, 30 years, the growth in the real estate sector was much. So this was not controlled by any particular law. So in 2016, the central government has brought this act, a central act, and authorizing all the state governments and union territories to formulate their own rules and regulations. So the central act is a union act, but its implementation is the duty of the each state government and union territory. So almost more than 25 states and then union territories have brought down their own rules and regulations under this act. So the act has specified to achieve its object. What is the object of this RERA Act? We are going to see. So the object of the RERA Act is, I am going to share my PPT, please. So the object of the RERA Act is it is a landmark legislation to reform the real estate sector, that is to streamline and regulate. That means the players in this real estate sector, maybe individuals, maybe partnership firms, maybe big listed companies. So when they are receiving the money from the prospective buyers, the money shall be exclusively used for the project for which is intended. A particular promoter may have 3 projects, 4 projects on his hand. In several cities, he may have the plan. But the money realized from a particular project shall go to that project only till it is completed exclusively. So that is the intention of this act, because the misdeeds of some of the promoters made the buyers go to court. On their own, they have to incur more cost to complete the project because it is abandoned by the promoter in the middle. So like that, the difficulties were there. The intention of the act is to streamline and to regulate. For this, the chartered accountant's role is taken into account. So chartered accountant is just like a monitor, just like a monitor. He has to monitor the progress of the work in this real estate project, each project wise, how it is we are going to see today. So the various measures are there, that is especially the financial discipline. So the work progress is linked with the financial discipline, so that the money incoming is controlled, money outflow is also controlled through this act, through the chartered accountant's certification process, through the chartered accountant's audit process. So thereby, each project will have the transparency and accountability. So the ultimately, as we see the statutory audit under Companies Act, or say tax audit under the Income Tax Act, so it is all to bring the transparency and accountability. So what the object of the act shall be in writing. Each section, each rule is being examined by the chartered accountant, independent chartered accountant, to express an opinion in the case of a statutory audit. In the case of a tax audit, say, to give the certificate for this Form 3CD, the facts being verified. So similarly here, the facts are to be verified. Which facts are to be verified, and how to certify, how to verify, what is the meaning, what are all the practical difficulties we are going to see. So that is the intention of this act, the spirit of the act, how chartered accountants are going to discharge, we are going to see. Similarly, the ultimately, not only the promoters will have their own say profit ending, because it is a commercial activity, they have to end up with their profit. Doesn't matter. But the major interest of the general public, the stakeholders, who are all the buyers, so their money is being protected. Without this law, they have to go to the court individually, and it takes a number of years for them to realize their money. So with a fond hope of a house, they may enter into an agreement, but ultimately, after parting some money, if the project is not being completed by the promoter, the general public will be at loss. So to safeguard their interest, what procedures, what penal provisions are there, that also a passing reference we'll see. So this is the object of the act, and then to whom it is applicable, when it is applicable. So this act has been passed by the parliament in 2016, but in 2016 itself only 59 sections were made applicable. This act is having 92 sections. The total 92 sections are made applicable only from 1517. So practically, though the act has been promulgated in 2016, it is known as RERA 2016 Act, but its practical implementation has come from 1/5/2017, the applicability. But even after 1/5/2017, it's not the Central Government Act that is going to prevail and be applicable. It is the states and union territories, because it's the law of property, just like our Transfer of Property Act 1882. It's the property rights will be monitored by the state government. So the state governments and union territories, as per this act, have to formulate their own rules and regulations. In fact, Maharashtra is the state which has formed the rules and regulations at the earliest in 2017, whereas all other states have come a little bit slow. So the Andhra Pradesh has come also in 2017, whereas in Telangana, it has come in 2018. So Andhra Pradesh and Telangana framed only the rules under this act, whereas Maharashtra framed rules separately and regulations separately. Rules separately, regulations separately. And Karnataka, among the other 4 southern states, Karnataka is the best state under this act to give lot of emphasis for the chartered accountants. Karnataka Act has prescribed 7 forms to be given by the chartered accountant, whereas Andhra Pradesh and Telangana have given only one form 3, that is the certification form they have prescribed. So the different states, different rules, different regulations have formed. So those who are participants, if they are exercising some professional work under this act, the project where, under which state, under whose jurisdiction it is there, one should be careful. Actually, CA Institute has brought out a book, Certification and Audit under RERA, in February 2019. This is the book actually. So Certification and Audit under the RERA Act 2019 February, the CA Institute has brought out this book. This book contains different states' rules and regulations also, and this gives the scope of chartered accountants' work. So primarily, the Act under Section 32A, RERA Act has said this Act is applicable for those promoters who are developing the land of 500 square meters or more. So if they take 1 acre land and they are going to develop into plots of, say, 10 plots, for them also RERA is applicable, not only for construction, for land development for sale. Land as it is you are buying, selling, no. You bought 20 plots as a real estate dealer, 20 house plots in different places or in a particular place, and all the 20 you are going to put for sale. No, you are not being covered by the RERA, because you are not developing anything, already developed plots. You are buying, selling as a stock. For you, this RERA, where the development activity is undertaken for a land whose area is 500 square meters or more, then the question of, say, applicability of this act arises. So if once the act is applicable, the moment his intention is there to develop, before selling, before making any advertisement, before employing any agents on his behalf to start the selling, first of all, he should register. So the registration process is under Section 4.1. So without registration, They are not supposed to start advertising. They are not supposed to receive the advances. They are not supposed to enter into agreements with the prospective buyer. And besides the land and land development, the other thing is the apartments proposed to be developed are 8 or more. So if it is less than 8 or less, does not exceed 8, the word used. That means 8 or less, this act is not applicable. More than 8, this act is applicable. So when you come to 8, this 500 square meters will not apply. That means in a less than 500 square meters land, you may construct now a single bedroom house, 10 single bedroom house, it is easy to construct in less than. Then also this act will apply because number of units are more, exceeding 8, this will apply. So either the land exceeds 500 square meters or the number of units exceed. What is meant by apartment defined? It may be ground floor 2 shops. There are also 2 units, whether commercial, semi-commercial, or say residential. All these things are units. So these apartment units, number of units, if they exceed 8, this act will apply. So that in my view, almost a 10 years average chartered accountant practicing, at least 2-3 clients will be there who are doing this real estate activity. Maybe they are buying the land in bulk and then selling it as house plots, or maybe undertaking as a developer. Land he is not buying. He is only proposing to construct in somebody else's land, generally known as JDA, but in reality it is a development agreement. So if he is undertaking 8 or more apartments construction in somebody's land, the developer has to register under this RERA Act with the RERA authority appointed by the particular jurisdictional government. So whether it may be a state government or it may be a union territory. So the registration process itself needs a chartered accountant's help, because if it is already an ongoing project, chartered accountant has to give a certificate. Though it is a new project after this act, because at the time of implementation of the act, some projects would have been ongoing projects. For them, the stage of completion, chartered accountant has to certify. Now, as on the date of applicability of the act, to go further with their business promotion, they must get the chartered account certificate in the prescribed format, that these are the assets, these are the liability, this is how the progress of the project is there. So even the agents who wants to undertake a selling act, agent means on behalf of the promoter, somebody else will be dealing with the marketing activity. So the marketing activity people are otherwise known as agents. So those agents also, without registration, without the project being registered, and the agent himself, his name is registered, he cannot start advertising, he cannot start marketing. So this is the particular section 9.1. And after the registration, generally, the RERA authority will give a share in the RERA authority's website. They will give a link for this particular project. So the promoter who has registered with the RERA authority must go to that website, register his project, display it. The details must be displayed there. There they must say who are the engineers, architects for this project, who are the chartered accountants certifying. Also in that website, they have to disclose their projects details, they have to disclose their model sale agreement, they have to disclose. So all these things will be displayed there. So periodically, they have to update that website also. Once in 3 months after registration, they have to update this also. Thereby, in each quarter to whom they have sold, in which project to whom they have sold, those allottees, if they have any complaint, so they can make a complaint to the RERA authority. RERA authority will adjudicate it. If they are not satisfied, they can go to tribunal. Every state government must appoint a tribunal. In Telangana, the VAT tribunal at the time itself, the VAT tribunal is made as the authority under the RERA, also as the appellate authority. So the allottees, if they have any complaints and if their grievance is not properly up to their satisfaction adjudicated by the RERA authority, they can go to RERA appellate authority also. Why I have to quote all these things? The chartered accountants can take up the work of registration, certification on behalf of the promoters, the project costs periodically. The audit, the RERA Act has prescribed under section 41421D, the annual audit also. So although we understand the annual audit means financial statement, P&L account, balance sheet, but here only the project annual financial transactions are to be certified. But the RERA Act called it audit, so we are also taking it as audit. So our institute also has given the book certification one part, the audit another part under the real estate. Apart from certification and audit, actually we are having the representation work on behalf of the promoters or on behalf of the complainants. So we can act as a authorized representative before the adjudicating authority or the appellate authorities, either on behalf of the developers or on behalf of the allottees, so that that is permitted professional service available. So similarly, the consultancy and advisory services, the fourth area. So when the RERA Act has given this much responsibility to the chartered accountants to certify the progress of the project, in fact, to be specific, every promoter, after registering, whatever he receives from the allottee, prospective buyer, the money towards the sale consideration, that money, though it is in parts, shall be deposited in a specified designated bank account. That specified designated bank account, minimum 70% he should deposit. For example, if a buyer of a 50 lakhs apartment enters into an agreement and he pays, say, first installment 15 lakhs, from that 15 lakhs, 70%, 10 lakhs, 50,000, the promoter shall deposit in the specified designated bank account. So 30% you can use for the project at his discretion, but 70% first must be deposited. As we all know, there is a Income Tax Act section 269 SS says that in respect of any immovable property sale, the consideration more than 20,000 shall be through bank. So the promoter of this real estate project must receive only through bank, and that designated bank account only for every project. If he's having, as I said, 3-4 projects, for each project a designated bank account should be there. The designated bank account he is registering with the RERA authority and saying this is the bank account, specific bank account. This will be there in the website also. So through that bank account only, installments. If it is a 50 lakhs apartment, maybe in 4 installments, 15, 15, then 10, 10, like that totally. In 4 installments, 50 lakhs may receive. So every time he receives, the money shall go to the specified bank account, and from there for withdrawal, the certification to be given by a CA. What is that withdrawal? The withdrawal certification, the Act specified that the CA shall give a certificate of withdrawal, which shall be filed with the authority, their authority, and based on that certificate only, permitted withdrawal only shall be withdrawn from the designated bank. What is permitted withdrawal? Depending upon the work progress, the work progress shall be percentage of completion method. How to arrive the percentage of completion method? 2 more certificates are made mandatory under there. What are the 2 more certificates? One engineer certificate, one architect certificate. The engineer certificate and architect certificate also shall be obtained by the promoter for the progress of the project, and based on those 2 certificates, the chartered accountant shall go through the books of accounts, shall go through the stock registers, maybe the vouchers, the bank accounts. So he must take all the bank accounts He must look into the designated bank account and the other bank accounts also. He must go through the vouchers produced by the promoter for this particular project. For each project separately, the progress of work. How do you measure the progress of the work? At the time of registration of the project, before the commencement, total costs, total project cost will be mentioned. So the promoter at the time of registration itself, along with the application, maybe in Telangana application is Form A, in Andhra Pradesh Form 1. So like that, each state the form is prescribed under the Act rules. So the registration itself is containing several conditions, and every registration application of the promoter shall be accompanied by an affidavit of the promoter. So in the registration application, project cost will be mentioned. Project cost details also will be mentioned, because the project cost mainly two divisions: land cost, construction cost. Otherwise, construction cost is also mentioned as development cost. So the land cost and development cost he has to mention. What are the components that can be form part of the land cost, form part of the development cost? In few slides we are going to see. So that estimated cost versus actual cost, the CA has to look into and verify and say, yes, based on this cost incurred, this is the percentage of completion. Instead of he independently coming to that opinion, he should, as the Act specified, he should depend as per SA 620 auditing standard, an expert's opinion also. Mere vouchers will not say that the work is in progress of 30%, 40%. No, the progress of the work physically, technically, on field by survey method or by technical method has to be measured by the engineer and also by the architect independently. Both those independent certificates shall be the basis for the chartered accountant to issue this certificate, that is the certificate of percentage of completion. So, for example, with the 30% money retained by the promoter, if 30% work progress is there, then the promoter will approach the chartered accountant to issue a certificate that the work I have completed 30%. Then out of the 70% money that is deposited, the 30%, 21%, out of 70, 30 comes to 21. So 21 rupees you can withdraw from 70 rupees already deposited in the designated bank account. This 21 rupees certificate, withdrawal certificate, withdrawal eligibility certificate, the CA has to give. So before issuing the certificate, what to observe, what to do, what not to do, what to include in the cost, what not to include in the cost is the topic which we are going to discuss today. So secondly, the audit. So the second role given to the chartered accountant is annual report. So the annual audit certificate, though as chartered accountants we know the difference between the certification and auditing. Certification means facts verification. In the tax audit, Form 3CD is a certificate, because 3CD contains certain facts verification. So 3CD is a certification. So 3CA or B is a report, true and fairness of the balance sheet. Similarly, here the audit is prescribed under the RERA, but this in reality is not an audit, because you are not expressing an opinion. Certification is a reporting of facts. Verification and reporting of facts is certification. Expressing an opinion after verification is audit. So here no opinion is independently is giving, but independently is verifying the certifying, one way of certifying facts per annum. At the end of the financial year, within 6 months, the chartered accountant who is a statutory auditor. Whereas for the certification need not be a statutory auditor. For certification, any chartered accountant can certify. Whereas for the audit, the statutory auditor has to certify. This is mentioned in the rules and the act. So both of them need not be there. For the project, as and when the withdrawal is necessary, the promoter can approach the chartered accountant, need not be a statutory auditor. Whereas, because let us say it is a limited company having different places, different projects. So you cannot ask that statutory auditor at all the places to issue the same. That's why the Act has not insisted, and the rules also not insisting. Whereas the auditor, after the end of the financial year, this audit report for each project, it is otherwise known as annual report. The annual report has to be audited and shall be issued by a chartered accountant, which shall be filed with the RERA authority. So here the audit is during this year. He has not violated the RERA provisions. What are they? At different times, the money received is properly deposited. Money received is properly utilized. The bank accounts are properly maintained. There is a reconciliation. Because as we know nowadays, single financial transaction, 4 legislations, 4 acts, 3 acts will be applicable. So the bank transactions, money receipts, let us say, this construction work being a service under the GST, any advance received is also liable for GST. Monthly returns you have to file. Whether he has filed and in those statements, this receipt is taken as an advance. What is the amount liable for GST? If it is a pass-through payment, is it liable for GST? Even under this act, the 100% money what he received sometimes has to be required instead of 70%. What is the situation we are going to see? Under both the AP and Telangana, in both the states, the possibility of instead of 70%, the rules prescribe in certain given situations, 100% money has to be deposited and used exclusively for the project. All these conditions, whether during the year is satisfied or not, at the close of the, after the close of the year, the statutory auditor has to certify that act envisages and the rules envisage. So accordingly, how that audit should be there. So in Telangana and Andhra Pradesh, that audit report format is not given. Whereas in Karnataka, it is given, in Maharashtra, it is given. So for the format sake, you can go to the other websites and states and then get the format of that audit report. Whereas certification format is given both Form 3 in Telangana and Andhra Pradesh. Whereas in the case of audit report format, annual report format is not, which the chartered accountant has to give on his letterhead is not prescribed. What should be given is prescribed. In how it should be given is not prescribed. So for that, you can go and get a better certificate in the other RERA Act rules and regulations. Maybe the neighboring Karnataka, which is a better one, or say Maharashtra, that we can take the format wise and do this. So these are the two mandatory provisions which require chartered accountants' role under the RERA. That is the certification of sale consideration, minimum 70% deposited in the designated bank account of the project. So progressively for withdrawal, the certificate, and then the annual after the close of the financial year within 6 months, the promoter has to obtain. So to this extent, at the time of registration, he gives an undertaking by an affidavit to the RERA authority at the time of registration itself. I will separately maintain a bank account. I will obtain CA certificate and then withdraw. I will file the annual report. All these things. He will also give quarterly. I will file the progress. Every quarter, the calendar quarters, every quarter, I will file the updated how many say agreements he has entered into with the allottees, prospective allottees. So for the prospective buyers, he will enter into agreements. So how many say sold, unsold data shall be available for each project in the website, because the promoter has to update it to that extent. As per the act, he will say give an undertaking. So similarly, once the project is completed, this is how this project is completed. The system payments also he will submit. This is how total sale proceeds. All these things. So the apart from the mandatory certification and audit, the chartered accountants have got the opportunity to represent before the RERA authority. As I said, the application the promoter may file, but To obtain the registration certificate, 2-3 times you may have to visit. They may need some clarifications. Those clarifications, as a promoter, he may not be able to personally go and explain. Better, he will give an authorization, wakalat or power of attorney to the chartered accountant. He can go and give the clarifications to the RERA authority. So that is the enabling section, section 56. So in this RERA Act, section 56 enables the chartered accountants to take the role of RERA Act representatives on behalf of the promoters or on behalf of the allottees. Can go and represent before the authorities. Similarly, the fourth role the chartered accountants are having, consultancy and advisory services. As the financial discipline is imposed in this RERA Act, the financial discipline as it is, promoter may understand or may not be able to understand. Technical terms will be there. There will be always, as we know, interpretational issues will be there. So to avoid all these things, the promoters will approach the chartered accountants to prepare the project report. So to have the legal drafting, vetting of the documents, because every promoter at the time of registration itself must display his sale agreement draft copy, sale deed draft copy. Several responsibilities are fixed under the RERA. So the promoter has to obtain the completion certificate as he disclosed in the agreement. I will complete the project in 24 months. He must complete. He is not able to complete due to some natural calamities or force majeure. So then he must apply for an extension. They may give 6 months, they may give 1 more year extension. So within that he should complete. If he is not completing, he is responsible to pay compensation like thing to the allottees. So he has completed, he has not completed, he has obtained all the approvals from time to time. He gives an undertaking to the RERA authority. Whether he has obtained, if he has not obtained, the chartered accountant while giving the progress certificate, in this respect, this law, he could not comply, the promoter. He must express, he must tell. So like this, these are all the implications, several implications are there. So the consultancy advisory service is also a role which chartered accountants can play. So in these 4 respects, there is a lot of work, a lot of, say, a scope for the chartered accountants to do these services. Actually, the CA Institute, we are having a committee for commercial and economic laws. Committee for commercial and economic laws. That committee only has brought out this book, Certification and Audit under the Real Estate, in February 2019. So under FEMA, as we know, for imports, for exports, several certifications are necessary by a chartered accountant. So the businessman may import, businessman may export, but IE code is satisfied. So the money sold, export sales, money is realized, money is not realized. So this is to this cause it is not realized. So many certificates are there prescribed under the FEMA to be filed with the designated bank, authorized dealer, otherwise known as authorized dealer AD. So like that, in several economic laws, the certification by the chartered accountant is prescribed. This being also a economic law. So here the scope of work is more. So as I said, quarterly, without any chartered accountant certificate, quarterly the information has to be uploaded by the promoter in the RERA website. So what information is to be promoted? So the progress of the project. Earlier, last quarter, we have completed 34%. Now it is 49%. How we arrived at 16%? The promoter to arrive the percentage, because if somebody asks them to prove, he must be able to prove. So only chartered accountant can help. This is the percentage you have achieved in this quarter. So measurement can be done by the chartered accountant, not only through financial figures, the measurement, not only based on the costs incurred. Costs also, as we know, expected costs, projected costs, budgeted costs will be different. Actual costs will vary, sometimes higher, sometimes more, lesser. So all these things, a chartered accountant can properly measure and help the promoter to comply the law quarterly to upload. So the project completion also, the percentage. Actually, for a first-time registration person, in the past 5 years, how many projects he has taken up? How many, in which stage they are there? How much is the percentage will come? So for the already existing also at the time of first registration of a first project also, if he is a developer who has already done in the past 5 years, that data also has to be given. So unless a chartered accountant's help service is taken, the promoter on his own may not be able to do. That is the scope of work. So they have given broadly. Now we should go meticulously. What are all the things? So as I said, the section 4.1 prescribes the application to be registered. The application format from state to state as per the rules will differ. So the application format in Telangana may be Form A. They have given an alphabet, whereas in Andhra Pradesh Form 1. So each state it will differ. So that is the application for registration. And the as per section 4.2 1D, that is 70% of the amount to realized by the real estate developer from the allottees from time to time shall be deposited in a designated or say identified separate bank account in the scheduled bank. So this money shall be exclusively used to cover the costs of construction and the land costs. Naturally, practically, before the registration itself, the promoter would have got with his money the land, would have acquired the land. So the land cost is already incurred. So the land cost is one of the major costs. So especially in the urban areas. So the land cost which has incurred is the forming part of the total project cost. Land cost includes, we are going to say, the money paid to the previous landowner, the seller alone is not a land cost. The stamp duty incurred for registration expenses. When you go to the local authority for approval, they may insist on some more expenses, like say, you should give some part of the land as gift, or this land is not sufficient for you to get the approval of this much plinth area. Please buy some more TDRs from the local authority. The promoter may buy the TDRs, transferable development rights. Those TDRs cost also is the cost of the land cost. Sometimes you buy the land partly with the promoter's money, partly with the bankers, financials help for this project. So the interest incurred exclusively for this acquisition of land also shall go to the land cost. So this is how the land cost has to be arrived, and then the construction costs have to be arrived. So these costs are to be met from this 70%. So the 70% exclusively deposited in the money the Act prescribes shall be maintained. So the withdrawal from this account based on the percentage of completion method of the project. So percentage of completion method of the project, as chartered accountants, we are all very familiar. There are works contracts people to draw the correct profit and loss account, to arrive the correct income recognition sake, if one has to see the two methods were prevailing. Two methods were, especially up to 2016, before the introduction of the ICDS, under the Income Tax Act also, completion contract method, percentage of completion method. So completion contract method means the project commencing date will be in one financial year, project completion date will be in next financial year, second, third, fourth financial year. So only in the year in which you complete the project, if you want to offer the income, completion contract method people were following, which was a recognized method. But the ICDS recognized only the percentage of completion method, which is in reality the revenue recognition AS9 and especially AS7, the works contracts, is recognizing now the percentage of completion. What do you mean by percentage of completion? As we all understand, but anyhow, to recapitulate, as the work is progressing, in the initial stages, if the work has not progressed more than 25%, no question of recognition of any income. What income? Net income. What is net income? The gross total project costs are to be deducted from the gross revenue from the project. So from the gross revenue, if gross project costs are deducted, you are going to get the surplus. That surplus is the income. So that estimated surplus, assured surplus, reasonably assured surplus of the total project, we are going to recognize year after year based on the work progress. So the work progress, actually recognition of revenue in these real estate contracts, real estate works. The institute in 2012 has issued one guidance note. So as we all know, as chartered accountants, guidance note is a binding on the chartered accountants to be followed in the accounting methods. So the guidance note on the real estate projects revenue recognition in 2012 is also modified in 2016 and further given. It is available in the ICA website. So it gives the percentage of completion method, how to arrive. The first initial stages, if 25% of the work progress is not there, project progress is not there, don't recognize. Even if 25% work progress is there, two more conditions they have said to recognize the income, to recognize the revenue. You would have entered into agreements, but to mere agreements, mere money received on advances is not going to be the revenue. Against sales, you will be receiving some advances. So the advance, all the advance are not your turnover. All the advance are not going to become your turnover. You should not recognize them in the P&L account as income. You should keep them as liability. Only based on the percentage of progress of the work, the revenue has to be recognized. To the extent of that percentage of progress only, the expenses are to be recognized as expenditure. So the difference between the progressive percentage of work completed revenue minus the percentage of expenditure, the difference is the percentage of profit, which you are income, which you are recognizing. So that is the percentage of completion method, which is in detail discussed in the guidance note, is to be borrowed, is to be understood, and is to be followed under the RERA also to issue the certificate of percentage of completion of the project. So there, the recognition percentage in the guidance note is the minimum 25% of the saleable plots or units should have been sold. Second condition, 25% or more of the project cost should have been incurred. Secondly, 25% or more of the saleable units would have been sold. And third is, out of the sold units, sale proceeds, 10% should have been recognized. 10% should have been received as money, sale consideration. So out of the total saleable units, 25% sales should have taken place, 25% units. And out of these 25% units also, out of the total sale money to be realized, 10% should have been recognized. Depending upon the money realized, the expenses will be proportionately. What is the total realizable money? What is the actual realized money? Similarly, the expenses, similarly, the percentage of profit has to be recognized. In nutshell, I have given. So that method here also we should adopt for arriving the percentage of completion. Based on the percentage of completion, the 70% money that is deposited shall be, according to that percentage, shall be withdrawn. Maybe first time you will do that. First time, say first 100 rupees deposited, first 100 rupees received, 70 rupees deposited, 30 rupees spent for the exclusively for the project, because 30% you have spent means it may come to say 10% of the project cost. Your 30 rupees may not, because in installments you are receiving, so your 30 rupees may not directly result into percentage of company. It would have resulted into 10%. So out of 70, you can receive only 10%, 7 rupees you can. So like that, the promoter should have brought something more money, not necessarily the 70% money. You would have brought on his own some more money, and would have started the work and would have taken the progress in the work. If we had done 50% of the total project cost, yes, out of 70, 35% can be withdrawn. 35 rupees. So like that, the percentage of completion method with the chartered account certificate, the money can be withdrawn. So this is the provisions. Just I have displayed, as I have already told you, that 56 is the section which enables the chartered accountant to represent. So the audit provision also I have explained you. The audit provision is that the promoter will get his financials audited within 6 months after the end of every financial year. So such chartered accountant, it should be verified during the audit that the amounts collected. What is this audit? This is not an income and expenditure and balance sheet audit. So only for this project, the expenses are incurred and the project is in progress as given during the year. And the money collected, what the auditor is assuring here, he is verifying that during the audit, that the amounts collected for the particular project have been utilized for the particular project. The difficulty is, the words hearing is easy. If 4 projects are there in the particular city, east, west, north, south, that promoter, for each project, he will not separately go by the cement, separately go by the steel. You would have ordered with the steel company, entered into an agreement, and would have bought 2 trucks of steel of different sizes. He will unload these 2 trucks in all the 4 sites differently. Maybe cement in bulk, he will enter into an agreement with the cement company. When a cement of 30 tons load, it will come, he may unload it in 2 different projects. So the money of that withdrawal of that particular bank account of a particular project, because you are having on the east, west, north, south 4 projects, 4 bank accounts you should maintain. So for each project, buyers are different. Their money, their bank account is different. The chartered accountant withdrawal is used for that particular project, has to give the certificate. So the meticulous stock records, the journal entries, and actually project cost means we are going to see. Stocks lying in the field shall not be taken as the cost of the project. Institute has given in this book clearly. The advances given to subcontractors is not the cost of the project. So out of the total payments, what goes to this? And also, some overheads are to be taken into account as project cost. What are the some overheads? Maybe the bank working capital interest you have to take. The land buying, you would have borrowed some money, or landowner himself would have charging some interest, would have given some credit. That should go to the land cost. So similarly, the work supervisors, for each project you may not have an exclusive, you may have one exclusive supervisor, but an engineer, an architect, maybe for all the 4 projects together you may have an architect, a full-time employee. After full-time employee salary you have to apportion, it's an overhead. So what shall not be included, we are going to see. The directors, managing directors remuneration, the partners interest on capital shall not form part of the cost of the project. So this audit certificate, for each project, the money is used exclusively, the certificate to be given by the chartered accountant. More carefully we have to give, because we don't know which promoter at which time, what will happen to the project. In case of any difficulty, people are there ready to take disciplinary action against the chartered. Based on your certificate, I thought everything is all right. You have not given any hint of something going wrong. So the proportion to the percentage of completion method, the work has been undertaken, the money has been used exclusively. So the annual audit report, annual report shall be given. This is the 3rd proviso to that section. So that's how the role of the chartered accountants. So what do you mean by total cost? Means the estimated cost of the project. So the costs involved both land cost and the development cost, and includes the taxes cess also. If at all some extra cess, and say for example, as we know, if agricultural land you buy, the land conversion cess, non-agricultural land conversion, NALA it is otherwise known as, in each state it is there. Sometimes 5%, sometimes 8%, sometimes 3%. Each state differs. Conversion of agricultural land into non-agricultural land. It is a cess to be paid to the revenue department. So you have to include that also as the cost of the land. So the land cost includes, For example, the difficulties. A developer, his ancestral land is now he is developing into house plots. Then his ancestral land, 10 acres, he is converting into 100 plots and he wants to sell. Now it is also a RERA project, land conversion into house plots and then sell. Now what is the land cost which he can take back from the 70%? He cannot till all the plots are sold and completed. So what cost is the land cost? Our institute has given, because they are not defined in the RERA Act and the rules. So the institute has given us that on the day of you announcing the project, taking up the project, or at least on the day of registration of the project, whatever is the sub-registrar value, that sub-registrar value, the value assigned by the government, value fixed by the government for the purpose of stamp duty shall be the cost of the land. That land cost you take as project cost. That land cost you recover, you withdraw from the 70%, which already you incurred. Then only you can meet the development expenses. So the land cost, if it is purchased 20 years back, he kept it as a personal asset. Now he wants to develop. So it is not inherited. So 20 years back purchased historical cost can be the cost now? Cannot be reasonable. Because after so long time, you are now starting this project. Now the present SRO value you can take as the land cost. So like this, the costs, though not exhaustively defined, the costs are to be ascertained reasonably. The institute has given this in this book, these illustrations. So, for example, when you buy the land, you pay the brokerage. So that cost also is a land cost add back. So the SRO values, as I have already told you, that is the land cost. Then the development cost. The development cost means if the land as it is by laying roads, by developing a park, by developing a community house, you may sell as house plots. That's all development cost. The apartments, buildings you are constructing, normally in big projects, ground floor will be totally parking, or ground floor at one corner you may construct some 10 shops also. So commercial will be there partly, and then the remaining will be residential. So like that, the construction costs you have to take up, and then direct costs, indirect costs. As we know, direct costs are directly related to the project. Indirect costs are proportionate, overheads are indirect costs. So for example, insurance you will take for employees, insurance you will take for goods that are there in the open yard. So insurance, unless you take, there is every possibility of natural calamity damage or human pilferage. So all these things you will take insurance. Insurance also is a cost, shall be taken as part of overheads. So the TDRs, as I have already explained nowadays, to get a more saleable area, you must buy the TDRs from the local authority and get the plans approved. But as per the plan approved only, you should take up the construction. So all these conditions are to be examined by the chartered accountant. Why we are incurring? Because he is giving the percentage of completion method. What do you mean by cost? And those costs shall be the permitted costs, reasonable costs, compared with the total cost which the promoter is estimating. So based on that actual cost divided by the total estimated cost, percentage of completion you will arrive. So what to include, what not to include, we should try to understand. Similarly, the general administration cost shall not be taken. So what the cost not to be taken, I am giving in this slide, that is the executive director's salaries, or say remuneration, partners interest and remuneration shall not be taken as the cost of the project. Similarly, selling costs. Similarly, for a particular R&D cost, for roads laying, you would have done some research using the plastic, 20% plastic in a road, a new technology. So you would have done some research, R&D, but that R&D shall not become part of the project cost. It is only a intangible right what you got. Depreciation on the idle plant and machinery. So depreciation on the used plant and machinery is part of the cost of the project. some cranes, some generators, some vibrators, some machines. You will use road rollers, bulldozers. So many things you will be using machinery. All the machinery that is used, its depreciation is also part of the cost of the project, which you can take into consideration either for withdrawal or say annual reporting. Costs of unconsumed installation. As I said, many number of times, in bulk you will purchase. But in one quarter you may purchase, next quarter you are going to use them, put for use. So what you purchased and lying on the floor cannot be taken as cost of the project. So similarly, subcontractor advances, interest on capital partners shall not be taken. So what is the percentage of completion? It's also very difficult one. It's not that easy. With the figures we can arrive easily, but whereas the figures alone is not sufficient because it's a technical job. The Act itself has said an engineer certificate. Don't go by the actual cost, by estimated total cost alone. The survey of work performed, the technical estimation shall be given by the engineer. Engineer will employ his own method to arrive the percentage of completion. So apart from engineer certificate, the architect's certificate also. So the architect also, a licensed architect, independently shall give. So the chartered accountant's independency is depending upon the expert's opinion. Those two experts would have given 40%, 40%. Whereas the chartered accountant through cost would have seen only it as 35%. So maybe costs are saved. So based on the cost saved, actual cost, the total estimated cost, the percentage has to be arrived. So not only his vouchers financial figures cost, the physical verification done by the engineer and the architect also shall be considered. And if he is concurring with them, all right. If he is deviating, differing with them, that also he should mention his report. To this extent, I differ. And to be conservatively, I am giving this much percentage has to be withdrawn by the promoter. So that's how the percentage of completion has to be arrived at by the chartered accountant. And based on that, the amount to be withdrawn from which bank, which amount he must withdraw. First time he will leave directly, but second time, first time he has given 35%. Second time 70% completed, but 70% completed already. First certificate 35% is withdrawn. So the balance to be withdrawn, that amount also in his certificate is mentioned. The certificate pro forma also given. So the Form 3 certificate pro forma, what is the amount eligible to withdraw? Even after the CA giving the certificate of some specified amount, say 2 crores you can withdraw. The promoter may not withdraw single day 2 crores. He may withdraw 30 lakh, 40 lakh, 50 lakh, like that in installments he will withdraw. Only when he exhausts his withdrawal power, again he will come to the chartered accountant for a fresh certificate, because the money withdrawn he has put for a use for the project, something more percentage is completed. So that's how the percentage of completion method is the safest method for the benefit. Actually, because of this RERA, only big players, big sound financial persons only can 100% adhere to these strict RERA rules and can complete the project within the time. A hand-to-mouth financial resources person, a promoter, it is very difficult for him to a number of times to approach the chartered accountant. So how much delay will be there? And each time chartered accountant has to ask for the engineer and architect certificate. They too must give engineer form 1, architect in form 2, then form 3 the chartered accountant has to use it. All these certificates must be uploaded in the RERA website. So this is the process. So a good role, big role is given to the chartered accountant, but meticulously has to perform what working papers, what workflow we are going to see in the given time. So the working papers for this, each certificate should have a separate letter of engagement. Last time I was given, you are given the certificate. You are not the statutory auditor. Second time he is approaching you for certificate. Second again you need a letter of engagement. So each time in the letter of engagement, this is the work I have done. These are all the permissions. These are all the approvals I got. Maybe a fire certificate, maybe a plan approval certificate. So like that number of certificates. Actually at time of registration, the promoter has to obtain from an advocate title, good title certificate also has to obtain. So that means I bought the land. Land is having good title. From whom? An advocate. who is having not less than practicing to get 10 years, from him he should obtain a certificate. And in addition to it, he should ensure that land ownership under no circumstances it will be there, dispute. So in case of dispute also, the money to the extent is assured by the insurance company. You must insure the land title deed ownership also. So like the number of certificates the promoter has to obtain, and all these things are filed at the time of registration itself, whether as per his commitment that's the engineer and architect certificates. The chartered accountant has to obtain and keep in his working papers, the books of accounts, vouchers, the allocation method obtained. So all these things are to be then the percentage of completion method, right percentage of completion method is arrived or not, the working papers must contain the project. So actually, in some states, in Andhra Pradesh, for example, the allotment register shall be maintained. So for each project, one register the promoter is supposed to maintain. And so what is the agreement? What are the installments so far they have paid? For one particular certificate, 2 installments. When he comes for the third certificate, maybe third installment you would have paid. So how much money he has paid? As I told you, the buyer may agree for 50 lakhs to buy one apartment. In addition to that, 50 lakhs for electricity connection, deposit 2 lakhs. For drainage connection, deposit 50,000. For water connection, deposit 75,000. So these monies the promoter will collect, and on behalf of the buyer will deposit with the respective departments. So he is acting as an agent on behalf of the, they are not pass-through payments. The buyer will send the money through bank only, but that money received by the promoter shall not go to this designated bank account, because they are not the revenues of the project, they are not the expenditure of the project. So neither it is revenue nor it is expenditure when it is paid. So those pass-through payments are not going to form part of the 70% calculation money. So like this, the a chartered accountant must keep full details of gross receipt, the amount to go to this 70%, whether the registers are speaking like that, and accordingly the registers reliability, as I told you, advances received shall be liable for GST. So under the Income Tax Act also, whether the same percentage of completion method he is adopting or differently. So in the notes on accounts and the assumptions made also in the preparing this percentage of completion, many assumptions are to be made, many observations are to be noted. So all these things are to be shown also. Now specifically, I am touching both Telangana and Andhra, because many of my professional colleagues from Hyderabad may be doing this Andhra work also besides Telangana work. Only these 2 states works I am covering here, because each state it will vary, the forms will vary, some of the minute details will vary. So you all can learn them from the different websites, or as I told you, our CA Institute book has covered all the states, all the union territories also in that book. So briefly, now I am touching the AP RERA rules and also Telangana rules. So in the AP RERA rules, rule number 14, subclass 5, registering of advances collected, form yes. So they have to maintain these registers. So thereby they will become the working papers of the chartered account. Chartered account cannot ignore these registers and then issue the certificate. So the chartered account, as I already told you, as per rule 5, besides the section 421D, the rule specifies the form 3, and the form is specified. So both the time of registration and at the time of withdrawal, what is the percentage of completion he has to give. For this form also additional information is given. What is that additional information? Though as per the form, amount collected, amount utilized you are going to give, what is the amount to be collected? What is the amount to be collected you will get? On the unbooked area, as per the sub-register office value, what is the value that is to be realized? Similarly, in the additional information in this form 3, the costs to be incurred also. So percentage of completion method takes only costs incurred. Expected total cost, actual costs incurred will give you the percentage of completion. But additional information, what it is? For unsold thing, what is the expected revenue? And for expenses not incurred as on this date, what are the expenses to be incurred, estimated expenses? Why this exercise? Received plus receivable, total revenue. Incurred plus to be incurred, total expenditure. In case the total expenditure, expected expenditure, incurred plus to be incurred. Hello? Somebody stopped the recording, it seems. So the expenses incurred plus expenses to be incurred if you arrive, and in case these costs are more than the realized revenue and to be realized revenue, then in that case, both in Telangana rules and AP rules, the 100% of the allottees money has to be deposited, not the 70%. So when you are giving this Form 3 certificate, you should see this rule checking also. By chance, for example, in the past 6 months, in reality, the steel and cement rates 25 to 30% have gone. Even the ordinary bricks rate has gone by 25%. So your commitment to the customer, at this rate I will sell you the apartment, that cannot vary depending upon the just like price escalation clause may not be there. So in that case, your profit 10%, 15% will erode. In such case, the RERA, what it is saying, the promoter will be in difficulty because it is not giving expected profit. It is going to result in loss. In such cases, the promoter's discretion to retain 30% is removed through these rules. Act prescribed minimum 70%. Rules are now saying 100% of the money, the allottees money, whatever you receive, because your costs are going to be more. According to the realistic estimates, your costs are going to be more than the revenue. Then unless you deposit the money 100% and based on the chartered account certificate, unless you use the money for the particular project and withdraw as per the rules, you are not permitted to continue the business. So this is the essence of it. As I told you, AP RERA, AP Act has not given any regulations. AP RERA Act has not given even the annual report format. So the rule says annual report shall be given. Its format is not given. Now the Telangana also, as I told you, the forms will vary. In Telangana, architect certificate is a Form 1, engineer certificate is Form 2. The registration certificate is Form A, that is different. So the architect certificate in Form 1, the engineer certificate Form 2, and the CA certificate Form 3. As in Andhra, here also Form 3 is the registration certificate, both for registration time, financial progress and the project progress, and at the time of withdrawal, right from the first withdrawal, the same form has to be used. So similar to Andhra Pradesh, here also the actual cost to be incurred and realizable revenue, how much from the unbooked areas, depending upon the SRO value, you will get the money to be realized also. The difference, kindly note, you would have sold more than the SRO value, what you have is already booked. But for unbooked, don't take that average price. Go to the SRO value, arrive the SRO value only. So that's how a conservative estimate is given. And as you know, the institute prescribed norms for finalizing the accounts. If expected losses are there, provide them. If expected profit is there, only on realization, you book the profit. That is the percentage of completion method. So that's how here also the costs to be incurred, if they are more than the total expected revenue, then you have to deposit 100% money. Whether he has deposited or not, the chartered accountant has to certify. So for each withdrawal, here also for the annual report, no specific format is given, but it shall be submitted within 6 months from the end of the financial year. Naturally, the accounts finalization also under the Companies Act 6 months is there. Normally under the Income Tax Act also to file the return of income 6 months time is there. So here also under the RERA they are given the 6 months time. But here you are not a total unit or say total say entities financial statement you are giving under the RERA Act only for this project. What are the costs incurred? What are the realizations made? Whether he satisfied the rules, that is the money received is exclusively used, exclusively kept, and as per the withdrawal certificate only is withdrawn. By chance, if there is a deviation has to be brought into. So how much deviation? Whether deviation has benefited the promoter or unknowingly some deviation has taken place. So all these things the auditor has to use his discretion and appropriately, whether it is a serious matter, whether it is a highlighted matter, or simply mentioned in the notes and accounts. So the auditor has to take the responsibility to comply the law in this respect. Similarly, the other things are there, general things to be followed. Certification is governed by the guidelines issued by the ICAI. As I told you, the certification and audit, there is a February 2019, the book is released by the ICAI. That one has to go through. And similarly, guidance note on the reports or certificates for this special purpose. There is a 2016 revised guidance note on the reports and certificates for special purpose. This is special purpose. We have to see. And using the work of the expert auditing standard SA 620 also we have to see. So this is not that simple, just like that they bring the tally package, trial balance, and then you certify and just simply work out. So you should go through the process and comply the law. It's not that simple. That is thereby the value addition will be there. The spirit of the act will be protecting only when we comply all these things and then try to help the government to regulate this particular activity. So here, see, though designated bank account, one bank account is there, the other bank accounts also the chartered account has to see, because the other 30% in through some other bank account you would have received. That money, how he had utilized. The project work he has undertaken means, so for this particular project, actually, from the income tax point of view also, section 145 of the Income Tax Act, the books must be reliable. The books must be reliable, maintained in such a way that books of accounts defined in section 212 capital A definition section. The books is cash book, ledger, bank book, others, but ultimately those books of accounts which will give a true and fair view and to arrive with the correct computation of income. So what is correct computation of income? In the case of a real estate man, for each project, what is the percentage of completion? What is the percentage of income taxable? The income taxable on percentage of completion means the assessing officer should not say that, oh, no, you got more profit, but postpone the taxability. You have shown lesser percentage of work progress. You should not say. So you must consider all the other bank accounts also. Then alone, what is the total expenditure is actually incurred, and say this thing. And you must consider his profit and loss account balance sheet, right? In the earlier opening balance, for example, you have entered this year. This is last year itself, it was in progress. Now, as a chartered account, first time you have entered, the opening balances for this project, the stock registers for this project. So they are all in sync with the P&L account and balance sheet already audited and filed. So unless you take into account all those things, similarly approved plans. Say, as I told you, the RERA's Act's particular emphasis is protecting the interests of the buyers, allottees of either vacant plots or brand new flats, apartments, or commercial complexes. So here the builder, the developer has adhered to the plans. Otherwise, say the penalty, if the builder is going away, completing the project somehow or other, hoodwinking the authorities, the owner also is liable to pay such a penalties to get the rectification. Say subsequently within 5 years, within 6 years, if the actual local authorities come and measure, if some variation is there. So for all those variations, owner is also responsible. So for that sake, what are the approved plans? What are the approved areas? So accordingly, whether the development work has taken place, budgeted price of the unit. So what is the budgeted price? What is the actual price? Progressively, you should compare. Not at the completion of the project, if you compare, what is the use? So during the progressive progress is taking, work in progress is taking place. Every quarter you have to, every year you have to measure the budgeted versus actuals, and then for each project cost also, each project cost, each unit cost also you should arrive. Then only you will be able to give the correct guidance to the developer. So the advances received as per the prescribed format, because as I have shown you in, say, the Andhra Pradesh RERA expects registers to be maintained for the allottees register, advances received and utilized. So they should all match with the financial books of accounts. So the account should match, the entry should match, the unit wise should match, and if at all there is a difference, how the difference has come, one has to identify. And as I told you, pass-through payments by mistake are taken as turnover in one quarter, next quarter it is rectified. So like that, the pass-through payments are a liability and they are not the part of the turnover. So they are not part of the gross revenue. So similarly, the agreements, what they say, sometimes the agreements, the promote, the purchaser, the allottee may violate. The allottee having agreed to pay in installments, defined installments. If he is not paying, he must pay the interest. For example, Telangana rules, they will say the State Bank of India standard lending rate plus 2% is the rate of interest applicable under this RERA. That rate of interest, either for the allottee or for the developer, for both of them the same rate of interest. That means if the developer is not completing the project and if the allottee refuses to use in remaining installments and he wants to claim back the money, what he paid from the date of payment, the money shall be paid with interest. So this is a very big power given to the allottee under the RERA. The allottee, for any violation of the developer, builder, the allottee can refuse to go through the agreement. He can claim back the money. The developer is bound to give back the money. So the developer must be very careful under this, not to violate the original conditions. So at what rate of interest means the State Bank of India main lending rate plus 2%. So similarly, if the allottee is not paying the installments in time, the developer may give 3 months grace period with interest. So without interest, due dates under the GST Act, you call it as milestones. You will fix the milestones in the agreement. So they have to pay the money. But in case there is a delay, so with interest, the allottee has to pay the money. And so all these agreements are to be studied. The documents are to be verified. So that's what checking with agreements for sale. So the chartered accountant who is going through this project, its revenues, its expenses. Say, for example, the interest is paid by the allottee. That interest also part of the revenue of this project. So if he has to pay, his costs also are costs. So the comparing the opening balances with the audited books of accounts also one has to see. So this is how the income tax returns, even the GST returns, because for all the advances, the promoter is liable for GST. So he may collect the GST. So maybe now the present status is he can collect the GST 5%. With affordable house, 1% GST, otherwise 5% he can collect from the buyer. So the GST what he collects, he has to pay. No input tax credit. In fact, for the input tax, reverse tax liability, the reverse charge liability is there. What is the reverse charge liability? Every builder, at least 85% of the expenditure, 80% of the expenditure must be from GST registered persons. He must buy the cement, he must buy the bricks, he must buy the steel, from electrical goods, wooden items, all these things from registered persons. If he is not buying from the registered persons, from unregistered persons he is buying, then he must pay the GST on reverse charge, which he cannot claim as input tax. So the GST records also what expenses is incurred, what is the cost of this project. GST also many number of times is not a receiving with the right hand and paying with the left hand, or receiving with the left hand, not with paying with the right hand. He must incur from his pocket in this real estate project. That cost also is a cost. If it is advantage only, the developer will go to that method. So from unregistered dealers also at the lowest rate, if he can get the materials, he may get, but he may pay on the reverse charge basis the GST. So all these things one has to consider as the cost. We are dealing with the cost. We are dealing while preparing the project, the estimated cost, while certifying periodically, the period costs incurred and to be incurred, one has to estimate and certify, issue the certificate. So the certificate includes not only the incurred cost, to be incurred cost, to be realized money is also there in certificate. That's why this importance under RERA for the chartered accountant to give. So the workflow and working papers. So as I have told you, after the audit, you are not issuing the certificate. You are issuing certificate during the year, means unaudited books. No statutory auditor has certified them. Based on that, if you are giving, you are more safe. But throughout the year, for withdrawal of the money, you are giving number of times the certificate. Or without your certificate, quarterly data, percentage of completion is uploading. They are also unaudited books. So, if it is annual audit, you will pass some closing entries. You can really identify and distribute the overheads to the project and arrive the correct cost. But that distribution of overheads may not take place by an entry, but still you have to issue a certificate for the percentage of completion during the year. So you are relying on the unaudited books of accounts. So one should be very careful. So what is going to impact subsequently should not say distort the overall picture what the CA has given to the authority. So whatever the certificate you give is going to the authority. So review the data and ensure that it's not materially misstatement. Sometimes deviation will be there, but it's not a material misstatement one should arrive. So check the progress that is as per Form 1 and Form 2 by the engineer and the architect. As I told you, what the progress they are giving, what method they are following, and is it substantially different from the conclusion which the chartered accountant is drawing. One has to check, verify, and if there is a deviation, in consultation with the management, arrive a reconciliation. So the management's representation, what they will give? They will give the budgeted cost, actual cost. So original budgeted cost, and as it is progressing, still the remaining budgeted quantities, as you know, the civil works quantity detailed estimate means engineer's detailed estimate. What is the detailed estimate? Quantity into rate. Total estimated steel 75 tons. So far 35 tons we purchased. 35 tons at a particular rate you would have purchased. But the remaining 40 tons at a different rate you have to purchase. So the quantities into rates are to be given by the management, reasonable estimates, whether they are all reasonable or not. How much to depend upon? It is the chartered account's risk he is taking in these estimates. Declaration that we have relied on unaudited numbers. A declaration in a certificate. So the Form 1, Form 2 data and required information has been given to professionals. So the declaration that all permissions and constructions for construction are obtained. So wherever the permissions are required, whether it is taken out, because sometimes the permissions non-obtaining or permissions not given by authorities may cost something more to developer. So all these things are to be taken into account. The risk factors, the cost factors, directly, indirectly, are to be taken into account. The numbers are unaudited, not materially misstated. All these things through the management representation letter also you have to take, and your notes on account you have to give. That's how the auditor's role one can discharge. I have given the auditor's role that certification is one role, periodically to be given for money withdrawal, Audit is second role. Consultancy and advisory role I have given, and fourth role, representation role, also given. So unless the provisions of the act are thoroughly met, what are some of the important aspects? For example, as I told you in the beginning, the promoter shall not receive from the prospective buyers more than 10% of the total agreed consideration unless a sale agreement is entered into and such agreement is registered with the appropriate sub-registrar. So immovable property has to be registered. So the promoter is prohibited from receiving more than 10% of the total sale consideration. Many number of times, the promoters, if the advance he is giving, say for example 20%, because you bargained for a lower rate. So 20% if you receive, what the condition the RERA Act says, have you registered the project? Have you registered the sale agreement? Through registered sale agreement only you take more than 10%. Otherwise you don't take 10%. You are going to penalize. You are going to violate the RERA Act. See, so that's how the RERA Act provisions also one should be, the auditor also, he has not violated. Auditor is going to give the certificate. Second, whether the project is carried out by availing any loans, borrowings, the name of the lender, amount of the loan sanctioned, sanction date, loan amount outstanding, collateral mortgage security. The RERA Act has imposed a condition. Once you put for sale a unit and then you enter into an agreement, that unit you cannot give as mortgage, as security for your general loan. So once you sold the rights of a proposed construction, that part of proposed construction shall not be given as security, mortgage security for raising a loan. So what are the other loans you have borrowed? You have to maintain a register and then mention for this particular project. So the on the he has borrowed, he has not created any charge on the booked unit, has to be mentioned. It should be there in your working papers. Because it's complied with the law, you are saying positively. Unless the negative things you question, you examine, and you take an undertaking from the promoter, giving a clean positive certificate without examination is highly risky. That's how this question I have given. So, any discrepancy notice in form 1, 2, 3 with reference to the issuance in accordance with the RERA Act rules and regulations. So, there may be a possibility of some slight deviations. So, those slight deviations we have to see. For example, out of enthusiasm, the promoter would have incurred more costs. What he promised to the buyer is lesser, and what he is giving to the buyer is something more cost incurring. He wants to pass on the benefits. So that cost, is it to be taken as cost of percentage of completion? So these are the discrepancies we have to see. That's how these are all there. So that's how I concluded my presentation. So 1 hour 40 minutes over. So the remaining 10-20 minutes I would like to spare for the members' questions. There should be an interaction. So if the members are having any doubts, either in the chat box or say if the organizers can give you a question, I would like to the extent possible, I would like to give the answers, please. Any questions, sir?
Thank you, Falgun Kumar, sir, for an excellent presentation.
Yes, Deepak Ladda. Very nice, very nice.
I was in the SICASA program,
yes,
the member outreach program which we had.
Yes.
Just now, it's going live simultaneously for the students on the new credit policy.
Okay.
So any member who wants to talk or can ask orally, we will promote them as a panelist. They can ask the questions. Sir, a very good lucid presentation, sir. Thank you so much, sir. Any member want to ask any questions, please let us know. If they want, they can chat. Sir, one question has come from Srinivas Murthy, sir. Annual report to be given by a CA or statutory auditor is the question.
Statutory auditors.
Okay.
So it differs from state to state, but most of the states, statutory auditor only has to give. That's what they said.
Okay.
Many of our professional members till the opportunity comes, let us wait, they are saying. But instead of that, my suggestion, one should be familiar with these forms and say all these rules and regulations. So when the work comes, especially registration work only, because the state authority is concentrating or say giving only at one place. One place. For example, for Andhra Pradesh, 13 districts, Vizag is there. For you, Hyderabad is there. So the other CAs, for registration sake, they have to come to travel. And then, so though online filing is there, they want some clarification. Physically, one has to appear. So this is a good area. Real estate people are the rich people who can pay rich fees to the chartered accountant. So this area, one should concentrate, give them the registration, give them the facility. Then only, say, this area can be served by our profession. That's how I perceive.
Okay. The next question is from Anand.
Better topic.
What if company don't maintain 3 designated accounts and perform all activities in one single account?
You are violating the RERA provision. The auditor, while issuing the certificate, even if say the RERA registration is there, and after that no designated bank account is one situation. So after that you are not maintaining a designated account, though you used the money for the same project, it is a positive compliance only. But strictly in the spirit of the act, you are not maintained a separate account. Only through one bank account, all the money you have used. So the auditor has to qualify in his report saying, RERA Act, what it said. You are not only in the rules, Act it is said, a separate designated bank account you should maintain. You are not maintained. So then the auditor will give a qualification based on that. The RERA may, though it is a small violation, the allotee is not at loss, the government is not at loss, but not compliance. So RERA may impose a small fine. That's how my opinion.
One more question, sir. From Srinivas Rao, sir. One of my friend is constructing more than 8 flats, but never registered under RERA. But banks are lending for the buyers. Is there any problem for the buyers?
For the buyer, there is no problem. Buyer is getting more right. Buyer at any time can file a suit against the promoter saying that you have violated the RERA. So because of your violation, say in future I may get. So he may claim more damages from the seller. So by not registering, sir, actually there is one section 31, I remember in this RERA Act, section 31. What it says, any person can file a complaint with the RERA for deviation of the act and the rules. Any person can file a complaint for the deviation of the act and rules with the RERA authority. So once any person means the banker will file, let us say, because the bankers in the audit report, we go to the banker, sir, out of 10 apartments, you lent money to 2 apartments which are not approved by RERA. So the banker will, to protect his interest, because one day or other, some difficulty he may face, he may complain to the RERA authority that this builder has violated based on expecting that his oral promise that he will comply the law. I lent the money. I am also now suffering. The banker may file. So then the builder will be in soup. So though it is late, in most of the cases, ground reality is the builders are not aware of all these provisions. Even if they are aware, they start the project. If necessity is there, then we will go for registration. So at least now you should advise to go for registration, pay the late fees, and then get the registration. So all the difficulties can be over. Even now, belatedly, if you get the registration. That is my advice.
Okay. So the next question from Hanmantlu, sir. Real estate entrepreneur may be rich, but they have to face many uncertainties. Restriction on withdrawal, cost of construction method, much of real estate entrepreneur investment will be, how much there will be change for the real estate entrepreneur. Sir wants to ask whether RERA will impact the entrepreneur from the entrepreneurship side also.
The general question, not a, it's a personal question, sir. The Parliament passed the act. 5 years is over, 6th year now. So for the past 4 years, all the states throughout the country are implementing. So for a developer, this is a difficulty means for developers, small difficulties. In 2017, when the GST Act is implemented, all the developers have gone to the GST Council and then said, sir, you please reduce the rate from 12%, from 18%. Please reduce the rate. What GST authority has done? Reduced it to 5% without input tax. Then automatically your cost has increased rather than in reality decreasing. So the builders, they may feel difficult, but once the parliament passed and it is years are going, definitely they have to comply, because the intention of the government is only big players must be there. You would have seen in 2015 itself, the real estate trust. In section 10, if you see, real estate trust, the government under the Income Tax Act has promoted. What is the real estate trust? Real estate trust is a taxable trust. It is not a public charitable trust. Real estate trust, so they want, because it is a big financial game, so each small players also can buy the units, just like mutual fund units, real estate trust, pass-through status, income tax exemption, section 10 if you see. So the government wants more proactive role for the builders, for the developers in the real estate. So with that intention, they brought the act. No doubt the difficulties are there for small people, but you and I cannot say address those issues. They are the issues addressed by the parliament. So we have to go by the law only. No individual discretion is there. That is my answer.
Okay. So the next question from Anand sir again. What if the details account by the promoter while applying RERA registration is different from the actual accounts, the promoter in which he is accepting advances?
You're right. Sir, the registration application, an average 25 to 30 annexures are to be there. State to state, it will differ. A registration application of a builder for a real estate project needs minimum 25 to 30 annexures. So in these 25 to 30 annexures, financial data is also asked for. So one should go through, just like that I cannot give you the answer for registration, what is the financial data. So this project must be evaluated correctly. With meticulous planning, its budgeted costs you have to give. Time within which you are going to complete, you should give. So both the cost and the time you must project, estimating with imagination. The builder has to arrive with a reasonable experience. Engineers will tell. So that's future projection plus in the past, if he has executed any projects, those projects also details also. How much is the cost of the project? What is the plinth area? What is the carpet area? Because the carpet area concept only in RERA you find. In real life business, the RERA only saleable area. Whereas in the RERA, based on the carpet area, the sale agreement should be there. The carpet area concept is brought in the RERA. So the financial data of the past also has to be vetted by a chartered accountant at the time of registration. So both past financial data and the future financial data, both are to be submitted at the time of registration. One should be very careful in giving these details. Yes, sir. Next question.
Okay. No, sir, Anand sir wants to ask, like, can the account, the bank account number which was enclosed in the RERA application should be the same where they want to take the advances, or they can take the advances in a separate account?
No. Advances must be deposited. They said 70%. If you are receiving 100 rupees, on the same day, don't touch that 100 rupees, 30 rupees at your discretion, you can spend in one bank account, and 70 rupees you transfer to this particular designated bank. So the advances must be deposited, they said. Advances must be received, they didn't say. You see the act and the my PPT also, 70% must be deposited. After depositing, withdrawal condition. So total advances you receive in some other account and transfer on the same day, 70%. The remaining money from next day onwards you use for 30%. That is the answer.
Sir, regarding this quarterly RERA certificate, it is based on the unaudited figures. Can we mention the same in the certificate that all the figures are based on the unaudited figures as produced by the management for our verification, or what should be the disclaimer should an auditor give so that he is also protected?
You are right. Based on the unaudited only, I am giving the certificate. You have to mention. Institute expected it. Institute has specifically said Based on the unaudited only, I am issuing the certificate, but they are not audited, but I am verified. I have verified. Verification is to be done by you. So audit is different, verification is different. Verification is the first process. Expressing an opinion is auditing, second process. The first process you should complete and give the certificate. Second process, leave it to the statutory auditor. So this process has to be done. That's what they have said.
Thank you. So the Anand sir is asking, what are the consequences to the builder who don't comply to the RERA Act provisions?
So many penalties. Negative side, I have not touched today the penalties because auditor's role is not telling the penalties to the public. First to comply the law, positively go. That's what we have to say. I have said like that. So there is no negative thing. So you need not worry. So negative penalties, number of penalties are there.
Thank you,
Yes,
sir. I think the questions are over. The time is also about to close. Very thank you on behalf of entire managing committee of Hyderabad branch, Falguman Kumar sir, who has joined from Tirupati despite his busy schedule. I'm sure that sir is very much actively involved in the regional conference preparations that is going to held in this month. And we request participants to please attend the regional conference of Tirupati branch, sub-regional conference of Tirupati branch.
1 minute, if you permit, Chairman.
Yes,
I myself will to attend this 27th, 28th at Tirupati. 2 days, it is a sub-regional conference. Kapil Goyal on income tax from Delhi, who is a chartered income advocate, is going to address. Sri T. Banusekar on income tax is going to address from Chennai. He is coming physically. So on the GST also 2 sessions are there. See, Mr. Ganesh Prabhu and others are there. So on the medium and small enterprise accounting and auditing, how to comply, so R. Sundararajan is coming. So the 6 sessions, very national level presentations will be there. Added to it, the Lord Venkateshwara's darshan is also being provided by the branch, Tirupati branch. I request all the members to come with their family members also, not many, maybe 1 + 1. So if you can come, we will provide the darshan. So please, I invite all the members on behalf of the Tirupati branch to come to Tirupati and participate in these 2 days. Thank you for giving me this opportunity.
Thank you, sir. May I now request the backend team to present the virtual certificate to Falguman Kumar sir for his lucid presentation. Sir, kindly accept on behalf of
Thank you.
And
Thank you.
reply just, sir.
Thank you. Thank you.
Now it's time for the formal vote of thanks. Then I sincerely thanks the speaker of the day, Dr. E. Falgun Kumar sir, for his an excellent presentation covering the standards on auditing, RERA Act, income tax